Hello and welcome to Pro Trader Strategies Market Commentary for Friday, February the 12th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and talk about these option strategies I'm implementing into my portfolio to increase my overall yield. For you folks, what I've done is streamline the process on finding the optimal option strategy for any given assumption you come up with. What we do is we look at this underlying and find out whether the premiums are cheap or expensive. That's going to determine our option strategy. So please go to protraderstrategies.com and check out my webinars on the specific strategies. We go into the detail on those in those webinars, more so than I can do justice in these quick daily market commentaries. So, all right, so go check those out at protraderstrategies.com or follow us on YouTube at protraderstrategies.com as well. All right, across the pond, we got preliminary GDP coming in, gross domestic product, coming in at 1%, expected to be 0.5%. We also got preliminary business investment coming in at 1.3%, expected to be a negative 1.4%, and they revised last month's number up from 8.8% to 9.4%. Industrial production in Great Britain, 0.2%, expected to be 0.5%. Manufacturing production, supposed to be 0.3%, it was 0.3%, expected to be 0.7%. And both of those numbers from last month revised up slightly, not quite making up for the headline number there though. Manufacturing production, just went over. Here in the United States, we got University of Michigan consumer sentiment coming in at 76.2, expected to be 80.8. So coming off quite a bit there on that headline number. Something to note with that, it is still kind of feels like it's creeping back, all right, after the pandemic. So we had a massive fall off in that consumer sentiment, but it is starting to kind of climb back, although it's lower than last month's reading as well. But it does have a feeling of a trajectory to the upside if you're looking for a silver lining. All right, so let's get on with the overall markets now. Crude oil making a move after yesterday's confirmation of a top. This market is just blasting off to the upside today. We probably could see a new high as strong as this market seems to be today. Gold futures trying to make a bottom here, up $1.90, but following that trend line, we came up and bumped our heads up against that this morning and started slowing down on some of that momentum to the upside. Then we talk about the bonds. They're coming back off again today. Interest rates starting to go up, probably near the highs that we've seen for this year at this point. I think the last I saw the high for the interest rate in the 10-year was 1.79. So I'm guessing that that's probably going to be very close to where we are now. VIX is coming off, but we do have at any given time a mixed bag here in the equities. Pretty quiet day, not a whole lot going on. It doesn't feel like the markets really want to make any kind of charge in either direction. We can see the Dow Jones is off by 12 points, but that's pretty close to being unchanged. NASDAQ up 6 points, but again, close to being unchanged. And E-mini S&Ps up 5 on the day, but we'll see on the breakdown that it is another inside day. We've gotten a few inside days almost all week we could consider very close to being an inside day. So just haven't gone anywhere at all at this point in time. Trying to make new highs here in E-mini S&Ps as we're talking right now, but still there'd have to be a pretty decent move, maybe even to print those overnight highs here in the day session would kind of probably bring that outside of those parameters there. All right, let's talk about a couple of trades. I wanted to run through these really quickly because we're going to be drilling down on this a little bit more detail here. If you guys remember with PENN, I ended up buying this PENN stock when it was literally the day it made the low, but I got into PENN right here for what was it, $4.49. Yeah, $4.49. So I bought PENN at $4.49. So long PENN right around there. And then I started going in and doing covered calls like we talk about in the webinars, and I started out with the selling the October 85 calls in there right around, when was it? I waited several months, so August, September. So right around in here, I ended up selling some 90 calls. So I sold the October, let's just call it the October 85 calls. So I'm doing covered call strategy. So let's look at the covered calls. All right. So covered calls, sold the 85, sold the October 85 calls in there for $1.36. I ended up covering those for 14 cents. So let's just call it $1.22 is my collection there. So it got $1.22 on these. That was my total profit here, $1.22 on those calls because I covered them for 14 cents. And then I went in and sold the December, the Dece 90 calls in there. So this was right around in here. Sold the December 90 calls on the covered call strategy for $1.02, but I did cover those for 77 when we started getting close. So we're just going to call that 25 cents. So collected a total of 25 cents in there. So we'll just start getting a running tabulation going there. And then I sold the January 120 calls and sold the Jan 120 calls for a total collection of $1 because I sold them for $1.23, bought them back for 23 cents. So we collected a full $1 on that one. So I collected $1 there. And then I sold the February 140 calls for 90 cents, but bought them back for 20 cents yesterday and rolled those out to the March. So basically 73 cents on the February. Sold the February 120 calls for a total of 73 cents, we'll call it, because I covered them for 20, 73 cents. And then I, rolled those February out to March and sold the 165 calls in there for a collection of a total $1. So, and now I have on the March 165 calls. So I talked about the Feb, these are Feb 140 calls, sorry. Rolled those out to the 65s for a collection of $1. Now, that $1's not in my account at this point, but it is very close, and it still lowers my overall cost basis in this. So let's just call this 70, 95, so $1.20, $1.20, and then we've got $3, $4.20 total collections. All right, credits. Now, that credit, looking back at what I paid for this stock, you can see that I've lowered my overall cost basis to 29 cents by selling these covered calls in the PENN stock that we did, or that I did. I bought at $4.49. So try to get this cost basis down to zero by selling these covered call strategies, and I've almost achieved that in PENN. You know, it helps that you buy it for so cheap though, right? All right, Disney did come out with earnings. The streaming is doing very well, but that's not what I wanted to have up here. I wanted to have up Home Depot, because similarly with Home Depot, I've been doing this as a poor man's covered call strategy. And with this trade, Home Depot, let me do it so I don't cover up the Home Depot. With the Home Depot trade here, I ended up starting out with a poor man's covered call. So I started out with getting long the March, bought the March calls at the 210 strike. So I bought the 210 calls in March, and then I sold the January 285 calls. So sold the January 285 calls for that poor man's covered call strategy for $54, $54.73 on the debit. All right. So this is the poor man's covered call. And then these are the calls that I'm going to be looking to roll out in time and up if I get the opportunity. Well, I did, and I was able to roll those Jan into the February. So I rolled them out and up. So I rolled, let's talk about the roll. The Jan So I ended up buying the Jan back, the 285 calls, and then rolled those into the February 295 calls, I believe. Yep, 295 calls in there for a total collection of another $1.79. $1.79 credit, all right? So let's write the credits out here. The credits, $1.79 on lowering cost basis. And then I rolled the Feb again, rolled the Feb, bought back the Feb, 295 calls, and then sold the March 300 calls. And I did this today. Yeah, I did this morning. The other one, PENN, I did yesterday. So rolled this into the Feb into the March for the 300 calls, and did that for a collection of $2 today. So another collection of $2. So lowering the overall cost basis on this for $3.79 on what I paid up here. So now my break even is getting lowered. My break even on this is now, because I've collected a total of $3.79, you can see that basically my break even is $51. That's from lowering this overall cost basis by $3.79. So my break even on this is 260, let's call it $261 in Home Depot. And as you can see, that is well below. But what has started out happening here is I've increased the spread width from basically 75, 210 to 285, and now it's all the way out to 90. The spread is all the way out to 90. So I'm increasing my break even on this trade, rolling out and up in time, just like you write about on a stock and in the poor man's covered call strategy that we started out with in Home Depot. And I went into the details of this in that roadmap to trading options, folks. So please go and check that out. If you want to learn how to trade like a real trader here, doing covered call strategies, especially on something like Home Depot, IBM, those are great great covered call strategies for those types of underlyings when we start seeing them trend in a sideways market. And we can even go back to IBM and talk about that as well, because I've been doing that consistently as well. We have an underlying that wants to trade sideways, and basically you want to try and buy this probably right around, actually drove that a little bit lower, but you know, right around 120, 115-ish area, and then be selling covered calls up here in and around that 130, 135 area. If it gets called away there, you can see that that is an optimal location to sell this and buy it back somewhere around 115. So that's how we're working these strategies on this type of trade going forward. All right, that's it. That's all I got for you guys. Hope everybody has a great weekend. Finally, take a moment to go over our disclaimer. As we are an educational company, I'm not trying to get you guys to do what I'm trading here. I'm not trying to solicit you guys to follow my trade recommendations or any of those things. What I am trying to do is teach you guys how to trade options and make sure that you're implementing them so that you are increasing your probabilities of success. All right, that's all I got. If you can't take that, take it easy.